All right, what's good, YouTube? Today I wanted to talk about Disney stock. All right, because a lot of people, man, they've been drinking some of that Disney haterade, and we got to talk about it. And then I also want to talk about the stock market and kind of where I think the dynamics are heading in the next couple of months. So, this isn't investment advice. This is what I think about on a daily basis, just kind of like what my brain goes through, and I just kind of want to share my thoughts with you guys. So, first things first, dude, Disney stock. Right now they are, experiencing temporary headwinds. And right now, things don't look very good. So there was a massive sell-off. The price of the stock dropped to like $80. And there's a lot of people talking about, Disney not being what it once was and this and that. What people don't understand is Disney is valued slightly higher in terms of market cap than Netflix. There's like a roughly $20 billion difference, which isn't much. So you're telling me Netflix, which is just one streaming company, they own nothing else, and most of the stuff and content on Netflix isn't even produced by Netflix. So think about that for a minute. You're telling me that is valued almost at the same price as Disney World or Disney stock. And Disney owns cruises, theme parks, as well as their own streaming service. So one of the reasons I like Disney is because Disney is a multifaceted company. They have their hand in different industries. They got theme parks, and you have to think with theme parks, how many other businesses are going to be developing their own theme parks? Probably not many in the next 50 years, okay? We're not going to see Apple or Microsoft, developing their own theme park businesses. So that's really a business with limited competition. It's not something we're going to see all these competitors start emerging in that market. That's a very old market with limited competition. So I would consider that a pretty reliable business model. Then you have their brand recognition. So everybody knows what Star Wars is, everybody knows what Marvel is. People understand the Disney brand. They have this whole media content and media library that they can use to not only promote their merchandise in their theme parks and everything else, but they have that to promote their media business. They can license all that content because it's theirs. So I think what you'll see is some of the content that's on Netflix is Marvel related and it's kind of related to Disney. They're going to pull that content eventually. I would assume they would, because why would you give your content or license your content to a competitor? It just doesn't make sense. Now that they have their own streaming service, once they ramp that up, they get the customer base that they're looking for, I would assume that they're going to cut Netflix off. So Disney, in my opinion, is a strong stock. Right now, the price is extremely high. They carry a very high valuation. Realistically, I would like to see the price of the stock cut in half, but I don't think that's going to happen. I would think it would be fairly valued if the price went down quite a bit. But that doesn't mean that I don't like Disney stock. I think the business model is intact. That's why I like the company. The model's there. They have everything that you need to make that specific company, worthy in the next 30 years. Technological disruptions aren't really going to affect that industry. Cultural changes and shifts could potentially affect that industry, but not really, because when you look at Disney, you look at what they operate, those are things that really aren't going to change with the times. Maybe people's perception on Star Wars or Marvel will change, but theme parks and entertainment and the stuff that they offer isn't going away. So as long as they can adapt to those kind of cultural changes, you have to think Disney is in a solid place. The stock has a solid foundation. So anyways, let me talk about the market. The market right now, I would say realistically should go down. However, no one knows where the market's going to go. If there's a second stimulus, I would have to assume that the market is going to go higher. And I do think over the next month or two, there will be an announcement of a second stimulus. And at that point, the market should theoretically go up. So if there's a second stimulus, which is weighing on the market goes up. If there's not a second stimulus and instead a second wave, market's going to go down. So it's, obviously talking about this, no one on YouTube, including myself, can guess where the market's exactly going to go. But over the long term, if you're buying a quality business that's structurally intact, I don't really think you have much to worry about. You shouldn't really care where the market goes. Me personally, my strategy isn't to time the market. Everyone will tell you that doesn't work. I have a multifaceted strategy where I have different investment strategies for my one portfolio. So I do different things in that portfolio to make me money. I don't just rely on one singular idea or ideology. I do all kinds of different things to make money within that portfolio, which involves my long-term stocks, stocks that I will trade, and then hedges against some of the picks that I, made. Because realistically, I can't see myself guessing 100% of the time stocks that are going to improve in a major way over the next 10, 20, 30 years. So I'll hedge some of my bets with, gold, silver, Bitcoin, even ETFs. So I do a whole bunch of different things to kind of limit my exposure and limit my risk to the certain stocks that I pick. However, when I'm buying stocks, especially during something like the coronavirus, I'm buying companies that are experiencing secular tailwinds. I don't want to buy into industries that are experiencing heavy headwinds. So cruise ships, I just talked about Disney and their cruise ships. That's one segment of Disney's business that I do think is a great business with limited competition. But when you're talking about buying into a cruise ship directly or a cruise company, that's 100% of your money going towards that. That's not something that I want. Disney owns ESPN and all this other stuff. They're a conglomerate. Carnival Cruise, while I do think that could potentially be a good play, I think they're really highly valued right now for no reason. All right, because a lot of millennials and stuff bought into the stock. I don't think that's a good play right now. No, in the future, maybe it is, but the price that it's currently at, they diluted shareholders. They took on a ton of debt. We don't even know, what's going to happen with the virus. There's a lot of uncertainty, and you're talking their business may be structurally damaged from everything that went on. And you want to sit here and tell me that that's a good company to own at $20 a share? No way. Maybe if they used to be $300 a share, but $20 a share, no. Limited upside with a lot of risk. It's not something I like to go for. So, and you can look at Disney and kind of say the same thing, but I don't see Disney filing for bankruptcy in the next year. However, I could see Carnival Cruises or Royal Caribbean filing for bankruptcy in the next year. So if you own those stocks, don't let my opinion change, your thesis or whatever you got going on. I'm just saying you need to know they have a lot of cash burn a month. There's a lot of different things going on within their company that put their stock at risk. And you need to know those things before you invest. So anyways, just kind of wanted to talk about the market. I know there's going to be someone in the comment section like, well, he said it goes up, it goes down. Yeah, personally, if you had to ask me which way it's going to go, I say over the next 3 to 4 months, we're going to see a new all-time high. And the only reason I say that is not because I believe the situation will improve, but I think the market gets a high off the stimulus. And I think the stimulus would push the market higher. That is just my opinion. It is not financial advice. Like I said in the video, I'm just sharing what I think with you guys. So let me know what you guys think down in the comment section below. Other than that, that's all I got. Peace.